Hi everyone, and welcome to this morning's webinar. Thank you for your patience as always. I hadn't noticed that David had actually started recording the webinar, so we are good to go. But before we do, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, this can be a very, very risky business, and please don't even think of using money that you cannot afford to lose. Goodness, so much going on at the moment, so much to cover in this session. A little recap on what happened on Friday. In fact, we moved our usual Thursday sessions to Friday, which was a really good move, given what was going on with the German PMI, great moves in the euro, and then of course Friday was the day that the indices finally took a bit of a tumble. Well, actually more than a bit of a tumble, but great stuff, as David. Good. And David kept saying red is his favourite colour. Anyway, before we start, here we are. In case there are some of you who are joining us who've never been before, that's me and David. And in this session, in fact, all our sessions, we look at the markets and the charts through the prism of volume price analysis, which is the methodology that he and I have been using in our own trading and investing for a long time, almost 20 years now. But with the forex, it's not just technical analysis that we have to be aware of as traders. Those of you who come along regularly will have heard me say this many times, and also read my writings and everything else that's out there on the internet about myself and David, of course. And that is that the technical analysis is just one strand of your analysis. You have to look at the fundamentals, but the differentiator with, I think, between what David and I do and really pretty much everyone else out there is we also look at related markets, because the capital markets are all interrelated. They all sort of bounce off each other. This is the slide from our education program, and these are the four capital markets. They all intersect at some point. They all as I said, interrelate with one another. You kind of end up doing what I call kind of cross-market analysis. And the market that has roared back into life is the bond market, because for two reasons. First of all, we've had an inversion of the yield curve for US Treasuries, and also very significantly the German Bund, because of the data that came in on Friday, is it negative now, David? And we're kind of seeing a setup in the markets generally that we haven't seen really since the start of the big financial crisis back in 2007, 2008. Kind of all the elements are there, as it were, which is why you'll be reading commentators and analysis. Everyone's getting very nervy, very twitchy, as it were. Does it mean it's going to play out in the same way? No, it doesn't. But what you as a trader have to know is you have to be aware of the landscape, the risk sentiment of the market landscape, and where you will find those clues are in the related markets, and that will be reflected in the currency and currency pairs that you may be looking to take a trade in. And what was I going to say? I can't remember. Yeah, and so the bond has gone negative, as I said, since for some time. We have an inversion of the yield curve. Now, what also happens? That's right. I remembered the third thing that happened back in the day when we had the big financial crisis, and that is we now have to wait and see what happens with the US dollar and gold, because when you all know about the correlation between gold and the US dollar. As the US dollar falls, then gold tends to rise. In fact, all commodities do. But it's when gold rises and the dollar rises that we know there is great stress. There are great problems in the market landscape. So we'll see if that also plays out in the coming weeks and months. Now, the thing we also have to remember is that these clues, these events that happen, the inversion of the yield curve, the Bund going down, that's just one thing. It may play out, but it may not. Central banks may do something, but it's just something we have to be aware of as short-term traders, we then take advantage of what the risk sentiment is in the market. And we're looking at the euro yen, which was actually the pair that we were looking at on Friday on the Ninja Trader webinar that we did. And I'll also be looking at the pound yen because of course we have Brexit in the background, but the pound yen this morning was really interesting. It's in quite a tight sort of consolidation on the slower time frame charts, but lo and behold, it actually delivered almost a 50 pip trade before the London Open, and we had the usual shenanigans with the crossover session as well. Anyway, I'm just going to stop there. I'm going to pass over to David, and then we'll look at some charts.
Thanks, darling, and a very good morning, good afternoon, good evening, wherever you are in the world. Great to have you with us today, and it's absolutely glorious here in Hampshire today, so I hope it's wonderful where you are too. It's just a fabulous spring day and wonderful sunshine, which is so nice after the storms of the last few weeks. So we are absolutely chipper, and great to have you here. If this is the first time you've come along, we run as a two-hander. We'll be focusing primarily on the MT5 platform on Anna's machines, but I've also got the Ninja Trader running on my side too. So I'll keep an eye on things while she's looking at her charts and vice versa. Very quickly, yeah, I'm just going to talk about, I was just going to mention the question from Keith about the Dixie and just sort of touch on the indices. I'll try and keep this brief. The indicators we've developed, certainly in terms of the Dixie at any rate, the Dixie is pretty much aligned to the underlying basket that you would find on the true futures contract, the ICE contract for the DXY. The only the difference is that we've taken out the SEK because it's not a popular currency on many platforms, and therefore had we rolled it out as that, as the pure basket, if you will, then there would have been issues for many of our customers to actually use the Dixie. The Dixie, I think from memory, forgive me, I can't remember exactly, I think it was about 3%, something like that, or 4%, and we replaced it with another currency. So it's not a true perfect representation of the Dixie, but it's as close as we think makes very little difference in terms of the underlying basket. The rest of it is exactly as you would expect to find. It's 58 point whatever it is for the euro, it's 9 point whatever it is for the pound, so you've got 65% of European currencies in the basket plus the rest that make up that particular index. The reason we developed the other indices was because they were very much based on the FXCM model in association with the Dow Jones, which is a very simple basket of 4 currencies, 25% equally weighted, and in our view, it's a more representative index, and that's the model. Sorry, yeah. Sorry, say again. And it's got the Aussie. So the Dixie doesn't have the Aussie. So when you look at it, you've got to remember that the Dixie was developed many, many years ago, 30, 40 years, and probably more than that, 40 years ago, let's say. Are they valid? Of course they are. They're all valid. It's just a question of whether they are representative now of the currencies that are primary currencies, which at the time were perhaps not considered as primary currencies, like the yen and the Aussie. And therefore, to have an index which is so heavily weighted to European currencies, whilst it's been around and it is the de facto standard, in our opinion, it's nice to have a balance whereby you've got something which brings other currencies in which are more representative in terms of percentages. So that's the kind of model we've used throughout to try and represent the indices for particular currencies. And I know Anna's got just a bit of news on a new one as well.
So David, if you're going to talk about the currency dashboard, Michael Joel has just asked a question about which of the indicators should be his main focus, as he's just started with the package.
Right. Okay, Michael, let me answer your question as well while I'm on air. Enjoy the rest of the day, Keith. I'm sure it's great on Dartmoor. Wonderful part of the world. So I'm sure you'll have a super day down there, especially the weather late stays like this. Michael, which of the indicators should be my main focus? I have all the indicators, thanks. In terms of the starting process, or I guess the process, yeah, let me talk about the starting process. It goes something like this. The step one is really the currency strength indicator, because that highlights for you all those currencies and their relationships to one another, which are strong, which are weak, which are going nowhere. And from that, it then gives you the heads up to identify which currency pairs may be of interest, and equally as important, which currency pairs are not of interest. Because if you've got, in the example here, this is obviously a screenshot, not live, but if you look at a pair there, for example, where you had the dollar and the yen, that's the red line and the magenta line, pretty much following one another around, then you could have guaranteed at that point that the dollar yen was just going sideways, because those two currencies were moving together, and therefore that would not be a pair that you would have considered for possible trading, certainly from a trend perspective or a breakout perspective. So that's one aspect. Obviously, the aspect that you're probably more interested in is, well, what is moving and what can I look at as a possible opportunity? And you would have certainly looked at the pound there. The yellow line was diving very strongly. The steepness of the line will give you the strength of momentum in that particular currency. And then from there, it's a question of moving on to try and identify which currency you're going to look at to consider as your counter currency. In this example, you've got the euro rising quite nicely. Looks as though it might be flattening off a little bit at that particular point on the 15-minute, but nevertheless, that would certainly have some strength in it, because you've got the two currencies moving in opposition. You've got buying in one, selling in the other. That's what you're looking for the whole time. In addition to that, you probably might look at the Swiss franc, because you've got the Swiss franc rising strongly. That's the green line, and you've got the pound falling strongly. They've crossed over. So what you're looking at there on a 15-minute time horizon is you'd be looking at a strong trend, because that trend is already underway. So as we've said many times before, you're jumping on a trend that's in train, in progress. And the benefit of that is that you know the trend is moving and your stop loss can be that much tighter. Now, if you're looking for reversal opportunities, then what you'd be looking at here is down at the bottom. You've got the New Zealand dollar, which is oversold in this time frame. The Aussie is also oversold and starting to move up. You haven't got anything at the top to sort of match that at in terms of a possible reversal, but you might, for example, look again, going back to the pound, where you've got strength in the pound. You might match that with a possible reversal off the New Zealand, which is now looking to rally. So that's how you use the CSI. Then you step over onto the matrix, and what you're looking at in terms of the matrix is you're looking at strength and weakness across the complex, because if you're looking at a currency pair to trade, what you want to try and establish is whether that pair, whether the sentiment for those two currencies, and you're looking at the two in opposition, is universal across the market. So suppose, for example, you were looking at the pound Swiss. What you'd want to look at is you would want to isolate, first of all, out the pound. You'd want to isolate out the pound first of all, and then you'd want to look at isolating out the Swiss franc, because what you want to see on both is that you have universal sentiment across the currencies matrix, the individual matrices for those two currencies. So in other words, if you are seeing strong buying across the 6 or 7 pairs in the market for the pound, and you're seeing selling across the market for the pound, and then you flip over to the Swiss franc and you're seeing that the Swiss franc is being bought universally across the particular complex in a similar time frame, then you know for a fact that trading the pound Swiss at this precise point has a much lower risk, because sentiment is universal across the two sides of the equation. Now, alternatively, you might find that the pound Swiss is moving, for whatever reason, in its own orbit. And that may well be the case as far as the pound's concerned, because given the politics which is just dominating us at the moment and has been for the last 2 years, that's perfectly legitimate and perfectly acceptable. But what you as a trader need to understand is that the case? There's not an issue trading it, because it's a perfectly valid move. but the risk on it is probably going to be higher, because if you're just trading something which is being driven by local politics, and this happens all the time, then the market generally is not moving in that direction. It may be moving in a counter direction, but you need to understand that. And that's what you've always got to tease apart. Local politics dominates. It's the same as when I say local politics, I'm talking about local news, events, fundamental news, politics, geopolitical, whatever they may be. A currency will move, often in opposition to the broader sentiment, because it's being driven by something locally. From the matrix, you move to the array. On the array, what you're looking for is you're looking at several things. First of all, you're looking at market sentiment, because it's displayed on the array. When you isolate them out, it will give you a different view on sentiment broadly, and it does it graphically. In addition to that, you will see strength of trend and momentum, and furthermore, on the second ranking ladder, it will also give you a sense of when those currency pairs are reaching overbought and oversold state. We haven't got it on this screenshot, but I'm sure you've seen it, you're aware of it. So what the array does is it presents the strength of the trend graphically, and it also presents broad market sentiment, and it also gives you a view on whether the pair you're considering is mid-table, perhaps moving up with its brothers and sisters or down with its brothers and sisters, depending on which way the sentiment is flowing. And the beauty of the array is it also gives you, it's like a radar, because the pairs kind of sweep together. If they're moving together, the best one to filter on is the Japanese yen, because the yen is always the counter currency. And you'll see when you've got broad market sentiment, then all the yen pairs will either be above the fulcrum of zero or below the fulcrum of zero. And they will sweep back and forth like a radar, which I'm sure you've seen, or windscreen wipers on a car. You can think of any analogy you like, but that's what you're looking for. You're looking for that broad sweep. You're also looking at, in terms of the currency pair you're considering, where does it sit in that spectrum, and how strong is the strength of that particular trend? Have I got more distance in terms of the trend, in terms of where is my pair? Is it sort of in the middle of the radar? And look at the extreme. Can it possibly move up to the top of the ranking ladder, or can it move down to the bottom of the ranking ladder? That's what you're looking for. Finally, you go to the currency heat map. The currency heat map, if we focus on this as an intraday opportunity, I'm just going to move the chat box out of the way there. Sorry, you're on Anna's screen anyway. What the heat map does is, as an intraday perspective, you're looking at the cells. So when you're scalping and you're looking at these as intraday trading opportunities, what you're looking at is where your pair is. You can also isolate it out in terms of broad sentiment again. And then what you're looking at is how the cells are changing color. So if you're looking at a short position, are those cells changing color across the fast time frames from the 1, 5, 10, 15 outwards? If you are seeing that reflected on the cells, then that is what is going on in terms of the array and in terms of strength of trend. So you're seeing that move, that sentiment ripple out across the faster time frames and out gradually to the slower ones. So you're looking, that gives you a visual snapshot of 250 odd screens of data without you having to have all that stuff on one screen. It just gives you that instant heads up on the heat map. The other way to use the heat map is obviously the ranking ladder on the left-hand side. This takes a slower term view of where currencies are moving, currency pairs are moving in terms of up and down the ranking ladder. The reason they move more slowly than on the currency matrix, than on the currency array, is because they are weighted, and they are weighted by the time frame. Because if you think about it logically, a 1 minute change in sentiment should not have as much impact as a 1 hour or a 1 day on where that currency pair sits in the ranking overall of bullish and bearishness. And that's why they're weighted. And that is why on the ranking ladder, they move at a more even pace, much more leisurely. You will find on an intraday basis that a currency pair might move up and down 2, 3, maybe even 4 slots on the day. But it won't jump up and down every time there's a sudden change in sentiment on a 1 minute or a 5 minute, but it will, if that sentiment then smooths and ripples out to the 15, the 30, and so on, then it will start to change and transition. So the ranking ladder, and again, you can use the ranking ladder. You can look at extremes, which is what we tend to do. We like to look at the extremes. We look at where our currencies are in the ladder themselves. Are they looking to move higher? Are they looking to move lower? Are you looking at this for overbought extremes from the top and the bottom of the ladder? And just from a longer term perspective, if you're trading this over, let's say, a few days, for example, then that certainly is one aspect of the heat map to consider, is look at the ranking ladder. Where are my pairs? And again, you consider it as a trend opportunity, or you might be looking at it as a reversal. But the key point is it's a much slower time perspective on the heat map itself. Sorry, it took a bit longer to get through that, but I hope that gives a flavor of the steps involved in teasing apart what is going on in terms of the market. I'm just going to pass back to Anna.
Right, and obviously we'll have a look at the other indicators as well on the charts when we get to the charts. To add to the technical analysis from the perspective of the dashboard, even if you just have the CSI, is what I would also say is you also have to decide whether you are going to focus on maybe one or two pairs, 3 pairs, 4 pairs, whatever it is, and really get to know those currency pairs, get to know the individual currencies that make up the pairs, or you're just going to be an opportunistic trader. So you're going to scan your CSI and the other indicators in the dashboard and just look for the best setup. Now, what you also have to factor in is what session you're in, because as we'll see when we have a look at the moves in the pound yen and to some extent the euro yen, I think David's got the euro, he's been tracking the euro Aussie, is you see a fantastic setup, you see a fantastic move in one session, which was the European session, and then it looks, to be going really, really well. But as we approached the London session, volatility came in for whatever reason, and lo and behold, the usual, it then reversed. It happens all the time, and we will get the same thing happen as London moves on and the New York traders join in, and then we have the same thing happen when it's the London fix. Then we have the same thing happen at rollover later on, when the market closes and rolls over to the next, it rolls over into Asia. So this is a 24-hour market. It is available to trade 24 hours a day, 5 days, five and a half days a week, roughly, because it opens on a Sunday. But you have to be aware of all, it's not simply, well, you can just go in and if you like to trade euro dollar is your favorite pair. But if you're in the Asian session, well, the chances are it's not going to move as much as it does in Europe, London, and New York. And you have to know what the volatility is of the pairs and the currencies. And by volatility here, I don't mean the volatility that comes into the market as a result of news. It's the volatility that tells you, how much does a pair move on average in a session, even on a particular day. And that is the sort of information, if you have the program, the forex trading program that we've put together, or you've been with us before, that information is over at investing.com. You just type in forex volatility and it has all the pairs. In fact, I'll bring up the link later on. And as well as that, the way we look at charts with regard to a technical analysis, you can do exactly the same with the fundamentals. And going back to what I said earlier, let me just push this back to where we were the other day, which is on, where was it? Let me just find the calendar. Hold on. Friday. It's on Friday. Yeah, it's easier if I just find Friday. Where was Friday? 22nd. And this was the piece of news that really, spooked the market. It was the flash PMI It was German, European and French flash PMI data, but it was this data here that came in. The manufacturing data came in at 44.7. 50 is the inflection point, and you pull up the graph, and that is, you read that in exactly the same way, you analyze that in exactly the same way as you would a chart from a technical analysis perspective. And that is the reason why we had the huge sell-off in the euro, sell-off in the indices, and such a fantastic trading day on Tuesday. They don't come around very often, but when they do, oh boy, they are really, as David says, red is his favorite color and manna from heaven. Let's get back to today. What have we got? Really, apart from the CB consumer confidence, not till 2 o'clock this morning, that is pretty much it, and it's going to be dominated by what is going on, certainly in the UK with Brexit. And it's very easy to be kind of not blind, well, it's kind of blindsided and sort of forget that there are other trading opportunities. But before we look at that, can I just bring up the pound yen from this morning? This is the one that I was looking at, and the setup that I have here on this particular profile, this is on MT5, where I have a daily chart to give me some context of what the pair is doing. This is a very wide-ranging pair. It doesn't look like that. It's very, very deceptive from the candles that we see at the moment, and we can see it is in a sort of consolidation. Consolidation phases of price action is when the price is ranging. It's bound between a resistance and a support level. On the slower time frames, the reason for understanding the phase of price action that is on the slower time frames, it does have an impact of what may or may not be possible on a faster time frame, which also begs the question is that as a trader, you really have to decide, do you like trading the faster time frames, or for whatever reason that they're too noisy for you, you don't have the time, you want to try and put together some trades on the slightly slower ones. And here you could look at the daily, and I have the hour here, the hourly chart for some context. And this is quite interesting because you can see here, this is a very, very well-defined area phase of price action. We know where the resistance is, we know where the support is, and what will be played out on the very fastest time frame is it will swing, but oscillate in this range. And we also have the volume point of control here. What that also says is when you see this type of price action on the slower time frames, do you actually want to try and take some trades on the faster time frames? Because it is going to be choppy, is the best description that I can give you. It is going to be possible. It was possible this morning because the setup suddenly came up, and we'll see here on the 3-minute chart. If I bring it up here, this is the move that I saw this morning, and it was a classic reversal move. It was picked up by the CSI. The trend dots kicked in, the trend monitor kicked in, but it's this candle which is really interesting. It then, in this move up, it was a trend with some volatility. In fact, we talk about trends and the different types of trends that can appear on the charts again in the forex program. When people talk about trends, they just sort of say they draw a line from here and they draw a line up there. They don't take into the account of whether that move from here to here was achieved relatively smoothly with nice steady price action, with a couple of sort of pullbacks, but none of these big wicks to the tops and bottom of these candles. No, a trend, they're not all created equal. There will be a trend with volatility, there will be a trend with no volatility, there's congestion with volatility, there's congestion with no volatility. Knowing that information also will give you a sense of whether any trade you're going to take, is there more risk attached to that trade? Because if you're going to be, if you're going to be racked about in the move higher, yes, that did move higher, but if you looked at the pullbacks here, they really were, they're really quite sharp. This is where VPA comes in, because in this nice move higher, what did we have? We have reasonably rising volume. You have to also bear in mind that this is London coming in, so you have a ton of volume coming in. But at the time, this was good volume. It's below the average line now, but you have to read it in context and relative to the session in question. So you had this really sort of fairly steady move higher. Then you had this correction, but look at the volume. That is good. That is telling you that is not going very far. Why? Because the volume's falling. Then you have a resumption, not a lot of volume underneath it, but you know, it's there. It's not going. It's certainly not going to fall. So we just have to wait and see, you know, at what point it is going to take off again. And it did. We have a little rise of volume. Then we have this candle here with a rise in volume, but look at the wick of the candle, because VPA is also candles and candle patterns. You have, yes, it did fall. Yes, the volume went up, but look, there's a big wick to the bottom of that candle. That has to be buying. That is price support. Then we had a move higher. And this is actually it's sort of a bit anomalous, because you had a big move higher, as we see here in this candle, really not supported by the volume that you would expect, but for whatever reason it carried on higher. Then we had another pullback again. We had reasonable volume, but we have wicks to the bottom of those candles, and you think, yeah, okay, at that point possibly that was the end of the move. And you know, there was nothing to suppose that the move would not have come to an end, reading it on a candle by candle basis. This is the you have weakness here, you have weakness here. In this tiny little bit of pullback here, sometimes in a pair, that's little secondary trend lower, if you like. This is a secondary trend lower. This would have as a secondary trend. There are traders on tick charts, Renko charts, who might say, yeah, you know, is that tradable? Sometimes it is, sometimes it isn't. But the volume here is not. There was selling here, wicks to the top of the candle, but it didn't go very far. And in fact, it kind of petered out on this candle here. You have the support lines coming in, which will also help to give, you know, add another dimension to the analysis. And then it carried on higher. But if anything, with hindsight, you would say, well, you know, maybe this was, you know, looking at all the candles in this little group here, this was possibly giving you a sense that maybe it wasn't perhaps carry on higher, but maybe it would be running into it was coming to an end, or it would come into some sort of resistance later on. We don't know. We simply have to wait. All I would say is, by looking back at the hourly chart, we know that this is on a the pair is in a congestion. So what we see on the faster time frames, you know, it's not in a trend on a slower time frame. So we have to look out for incidences like this. Maybe it's coming to, you know, the congestion on the slower time frames is being compressed. Anyway, it carried on higher. Then we have this candle here with a big wick to the top with a ton of volume underneath it. That's already, you know, making us suspicious. Two more candles, two down candles, rise in volume. What also happened is we're coming up to London. So we know what happens is, as we come up to the London session, you know, the all sorts of tricks are going to be played. And in fact, this is the classic one. So we have a big up candle, not a huge amount of volume, certainly not as much volume under that one. And, you know, for the range in that candle, you would expect the, you know, the bar to be up here somewhere. Plus it triggered a volatility, the volatility indicator, which is these two purple dots. So, you know, at this point, this is, you know, something is not right. And inevitably, with London approaching, volatility triggering, volatility indicator triggered, what happens after volatility? It retreats to within the spread of the candle. Now, that is quite a noisy, as I said, trend higher, wicks to the top, wicks to the bottom, all sorts of, you know, volume clues and anomalies, as it were. What you can do, which is why we've developed this, is you can smooth that out by using a non-time-based chart. And here I have the Renko, and the Renko on this. Let me just see. It's actually based at 2. It's a fixed box size. I've actually got 2 pips on this one. And what it does is, if we look at the same section of price action, because you have the smoothing, you don't have the wicks to the tops and bottom. And here you can say this was a trend, but you can still say, you can see the pullbacks here. This is the first one, this is the second one, this is the third one. If you use it in conjunction with the time chart and with the other indicators, this is how you will be able to take advantage of these moves in pairs that are certainly in congestion on the slower time frames, and possibly have a trading opportunity. And that actually move, and the way we use this indicator, you really have to see, it depends how aggressive you want to be. If you you can wait for the trend dots. The trend monitor kicks in slightly later. The trend dots are the closest to the price action. David and I like to wait until there's confirmation of the two bright colors, and you can then place your trade, and away you go. Support and resistance will also give you where to place your stop loss. On the reversal, when we saw to the with that volatility candle, this is what the Renko will do. The Renko actually will keep you in until the point when it's the price action senses that it ain't going to go any further. And in fact, if you understand price action and volatility, and seeing that at the top of this candle, even if the Renko is signaling that it's still trying to push higher, you can say, do you know what, I've seen the volatility, London's coming up, the CSI would highlight it as well, I'm going to go out. And that is a really, really nice move. And it actually from, where are we, 145.07, let's say 145.12, something like that. And where is it if you got out there? So 140, that's 54, that's 30, 40 pips, you know. I think most traders bite your arm off for that. What's happened is there's also been a very nice reversal with volatility again, as we can see here. And in fact, if we look at the 3-minute chart, you can see the volatility candles. Now on this occasion, as we see here, the Renko, it's up to you. When you see the two charts in tandem and you see this price action going on, we had the push back into the spread of the candle, and it's perfectly feasible to think that that would have reversed off there as it had done here. But Renko was, you know, just kept in. It's how you feel about taking a trade, staying in a trade when volatility hits the market. You have this tremendous momentum coming into the market. It retraced, but it carried on lower. But look at the, look at the spikes to the bottom and tops of these candles. On the Renko, that was certainly picked up here and picked up here again. And also we did have a change of trend dot color. It goes to grey, which is a sort of congestion, if you like, and grey here. It's up to you. Personally speaking, given what I had seen on the time charts, I would have said, yeah, so much volatility. If that had been enough in there and you were happy to take it, just come out. There's no, this is not a, this is not a competition to see, you as a trader of how brave you, what am I trying to say, David? It's not a match. Use the word gender. It's not a macho thing. It's you are there to exploit what you are seeing on the charts. And finally, with the pound yen, I obviously have the yen index, but we've also now got a pound index for MT45 and NinjaTrade. It was always available for TradingView. We developed it for TradingView as it was possible, but it's now available for MT45 and Ninja. If you have the complete package, you head over to, is it Labs on the site, Quantum Trading?
Do you want me to just...
Yeah, do you want to explain that bit? But basically, this is the pound. This is the hourly chart. Actually, just let me turn it down. There we are. Where you can see about the pound. And if you're trading, click the wrong one. This is docked. Right, there we are. Let's move that to 5 minutes, see what's happening. There we are. Right. What we see here with the pound index, this is on the 5-minute chart, we can see that immediately that there is some selling in the British pound. If I just move over the CSI as well, this docking facility that you have on MT5, what it means is, it means you can actually move the charts out of the profile onto another screen, which does make life an awful lot easier. You can't do it on MT4, but you can do it on MT5. Right, so that's the CSI on 5 minutes. We can actually see the pound being sold off, and that is reflected in the pound index. And what it does, when you have an index, either the Dixie index, the euro index, we've got dollar index, euro index, yen index, and now we have a pound index, is if you're trading a pair that has the pound in it, it just helps you to stay in. Basically, you think, oh yeah, pound is still being sold, and you use it with all the other indicators as well. Sorry, David, did you want to say something about the pound index? Yeah, okay, I'll turn myself off.
Just very quickly on the pound index, we hope to have that rolled out by the end of this week. If you want to just keep a check on when it's been released, if you head over to Labs, Quantum Trading Labs, that's labs.quantumtrading.com, we will put a post up there once it's been rolled out. And this will be, I think this week it will be on MT4 and MT5, and then we obviously will be working on it for other platforms. As Anna said, it is on the TradingView already, and we're just porting it backwards, if you like, onto the others. So keep an eye out there. If you have the full package, then you'll know that you receive all indicators we develop in the future free of charge. You don't pay us anymore. All that happens is that when you log into, and we will do this for you, the only bit you will have to do is actually download the package again. What we're doing right now is we're updating the enablement system, we're updating the downloads, but what you will find in a few days' time is that you will find that if you have and this is only for the full package, if you have the full package, then you'll find that the index has been added to that in your dashboard, so you'll see it there. And all you need to do to enable it is just go and download the full package again, and you'll find that the pound index is then available in the navigator and available for you to use straight away. It's very straightforward, very easy to do. It's all explained on the site on Quantum Trading under the support pages of how to update and update your indicators as well. So it's very straightforward. I will pass back to Anna. Just one comment to add to what Anna was saying about the pound yen. I think it was on the 3-minute time frame from memory. If you've still got it there, the one at the bottom, that's the one. Again, the importance of support and resistance. This is support and resistance on MT5, same on MT4. What you see there are the two strengths of support and resistance. The dashed lines indicate regions that have been tested, either from a support perspective or a resistance perspective. Areas which are stronger are then denoted with the solid lines. And you can see up at the top there, there's a very strong level of resistance at 145 spot 59. I mean, it's absolutely pinpoint accurate. This is the beauty of the indicator. It doesn't give a broad general range of support and resistance. It gives you pinpoint accuracy. That's not to say that, you know, these are there to take reversals off, but they are there to highlight where these regions are. And moreover, when you see a cluster of those, either a cluster of dashed lines very close together or a cluster of solid lines close together, if you see solid lines close together, it is a very, very strong region. Singly on their own, they're strong, but obviously as clusters, they're even more powerful. But it just gives you, it's another plank in the VPA armory, support and resistance. And you're either looking at it through the prism of this, which is purely based on price action, or you're looking at it through the prism of volume, which is where the volume point of control indicator comes in. And that is looking at it from the perspective of congestion in terms of volume zones and how those volume zones are likely to play out, not only in terms of the volume point of control itself, which is this solid yellow line, which is where we have price agreement. And we have this classic example here on the pound yen on the hourly. You can see it there top right, where the pair is in congestion. The volume is constantly building and rebuilding in this region. And until we see a shift in sentiment, either bullish or bearish, that's where it's going to sit. Once it breaks away, then you start to bring your levels into play from a price perspective. So you're looking at the corridor of price action, if you will. and where the ceiling and floor of support and resistance have been built very strongly. And thereafter, once you see the move away, then you bring in the volume point of control aspect, the volume profile aspect, where you're looking at the opportunity in terms of, well, have I got a low volume node ahead? And if I have, the market's like to crash through that or rise through it very quickly. If I've got some more volume below me or above me, it's going to struggle a bit more. Then you're looking at the volume price relationship below on the linear aspect to establish, is there enough volume here to drive this through this particular region of congestion? So I just wanted to make the point. Hand back to Anna.
This is quite really interesting on the pound yen from a understanding phases of price action, different types of price action on multiple time frames, and it also really, I think, shoots down in flames these claims that are made by other traders that who offer a trading tactic, a strategy, call it what you like. It works in all markets. It works in all types of markets. It's absolute rubbish, because a market that is is range bound and in congestion, where there's very little divergence, or there's not enough of a divergence within the price range that is moving in. How can you say that you would approach that in the same way when you have strong divergence, and perhaps you'd be looking for either to join a move that is underway, either through a correction, a pullback, using, you validate that by using volume price analysis, or you're looking for or you wait until a potential reversal setup happens. You can have a reversal in inverted commas if something is range bound, but you've got to have enough breathing room, breathing space in the range that market or pair is actually moving in. Now, looking at the CSI, I've actually moved it back over from my other monitors, and what I was, this is the 10-minute chart. If I just move to the 5-minute.
That's fine. Oh, okay.
Okay, the 10-minute. While David was speaking, there wasn't an awful lot of, there was no divergence. There was, the pound and the yen were kind of moving together. But if we go up to the hourly chart here, you've got these two lines really reflecting what we see on the chart here. There we are. That is the congestion that we are seeing on the CSI on the hourly chart. When we moved, while David was speaking, I was looking at the CSI, and I went to the 5-minute chart, and they were, there wasn't strong divergence. Then I looked at the 10-minute up here. Here we are. Now we're seeing a little bit of, I wouldn't say divergence so much on the pound yen, but what we're seeing some selling that's coming into the yen. In fact, the yen has been sold off. But of the pairs that on this particular time frame, I would have said the euro yen was a much better bet, because of the type of the phase of price action that is that you can see, that you can identify across the time frames for the pound yen. It doesn't matter whether it's the pound yen. Price action is price action. VPA is VPA on whatever chart. If you've got price and you've got volume, you will make exactly the same analysis. And you see these types of phases of price action, types of phases of price action on a chart: congestion with volatility, congestion with no volatility, trend with volatility. If you identify them and you can recognize them, not only does it help you find a suitable trade, but it also helps you in that all important aspect of trading is trying to judge whether the trade you are going to take is, how risky is it going. It's not the monetary side of the risk, it is actually the risk on the trade, and the risk in the sense that if I go into this trade, it also gives you an idea of the potential that trade has. Do you want to say something about the CSI or not? Or are you happy with that?
You go back to the 10-minute.
The 10-minute one, yeah, got it here. Have you gone back to Alex about monitors?
I was sorry, you've got your mic open, sorry. Okay. Sorry, I was just answering Alex's question on the monitors. I'm sure you see all our replies, I hope so anyway, but very quickly just to recap. 2 to 3 monitors is really bare minimum, I would suggest, and 4 to 6 is really preferred. And I'm sure you've seen them arranged on monitor stands, which you can get from various places. So I hope that answers that one for you, Alec. Just wanted to say on the CSI, I've actually got the Aussie Swiss up at the moment, and it's quite interesting because it goes back to what we were saying when I was talking about the currency dashboard, explaining that answer to Michael. Because what we're seeing at the moment is there is a trend in the Aussie Swiss, but it's quite laboured, and it's laboured because the driving force in that pair right now is actually the Swiss franc. If you've got your trading workstations open, then pull up the Aussie Swiss, and you'll see what I mean. The Swiss franc, that pair is being driven by the sole buying in the Swiss franc. It's not being driven by anything particularly to do with the Aussie. Now, there may or may not be enough of a trend in there for you as a trader, but that's the reason that you're seeing some sluggishness in it. You're not seeing a really nice trend developing, a strong trend developing, and it's something we always highlight. You will find trends which are driven asymmetrically, in other words, off one side of the pair. Sometimes that is enough to grab some pips out of it. If it's strong, fine. But just be aware of the fact, and it's just another aspect of the CSI, it just highlights these things for you. It tells you why that trend is a little bit sluggish, a little bit slow, because you're not seeing it driven asymmetrically rather between both pairs. Now, looking at the 10-minute there, if you were looking at the Swiss franc as an opportunity, you would be much better served looking at the yen at the moment, or looking at, certainly the yen. Possibly the pound, although again, that looks a little bit flat there. It's not diving as strongly as you might. It might kick down to another level. But literally, as we're talking now, then you're seeing the cross there. Anna's just flicking them off for you just to highlight that. You can see there the Swiss franc's not rising nicely, the green line, and the Japanese yen has now kicked over and is selling off quite strongly. So you'll see a trend there. There we go. So there will be a nice little trend developing there on the, let's say, the 3, 4, 5 minute up to the 10-minute, and maybe that will migrate out to the 15, but that's what you're seeing right now. And in terms of the other currency pairs, flicking them back on again, you were looking at things like the Swiss franc. Or would you be looking at in terms of the euro? Answer no, because the euro is being bought, Swiss franc is being bought. Now, if one or other of those currencies is being bought more strongly, then you might see a minor trend, but it's going to carry more risk because you're not seeing the two forces in opposition driving the pair strongly. One of them has got maybe a little bit more strength than the other, but it's not strong enough to develop a strong trend purely because they're traveling in pretty much the same direction. So you've just got to be aware of these things all the time. Of course they will change. You've got to use multiple time frames. You've got to have these things, and in some ways it goes back to what Alec was asking about monitors. You need to have all this stuff in multiple arrays. You need to have the CSI in multiple arrays. So you're looking, if you're a 10-minute trader, or you're a scalping trader, 5-minute, whatever, you've got to have, the 3, the 5, the 10, whatever, up there all the time. Because what will happen in 3-minute may ultimately reflect on what is going on in the 5 and the 10s, because everything starts at the fastest time frame. I mean, if you take it down to ridiculous levels, everything starts on a 5-second chart through to 15 if you're a ninja, out to 30 seconds, up to 60 seconds, into 2-minute, 3-minute, 5-minute, 10-minute. That's the way the market works. And if it's a change or a strong trend developing, you will see it. It's the same in terms of what I was saying earlier about the currency heat map. You will see those cells change color as it ripples from the fastest. We're on a minute here. We don't have seconds on MT4, MT5, but certainly on NinjaTrader, if you had it, we didn't develop it to that level because it just creates too much data to compute. But in terms of the flow of sentiment, that's what you're going to see. You will see it from the fastest to the slowest. So you have to have multiple time frames on everything for the CSI, the other aspects of the matrix. You're going to have your charts up. You're going to be looking at related markets. You want to see what's going on in terms of sentiment and related markets for that particular pair, etc., etc. I'm going to pass back to Anna.
Right, I'm going to move over to you. It's 9:30. Right, just wanted to finish up on the euro yen. This is the move on Friday. I've got this gap here because XM, in its infinite wisdom, has decided to put a Sunday candle in. It never used to, which I preferred. Actually, it's just my preferred choice. That's why you have suddenly got these gaps everywhere. That's simply Sunday trading. And we can see here what happened on the day. Huge volatility candle, a candle down move, fantastic move, triggered the volatility indicator that we can see on the daily chart. That of itself would tell you that the price was going to retreat within the spread of the candle. And in fact, there was some buying coming in at the close of the towards the end of the session. That was Sunday. It was carried on. This was yesterday, which is a really big, quite a big doji, not doji candle. It's got a very wide body, but the candle itself will tell you that there were fantastic trading. You know, what's euphemistically known as good two-way trading action, and in fact this is the move higher. We had the move higher overnight, and we've got this little pullback here, but this is on the daily. So that was how that is reflecting on the. I was quite interested on the euro, because we were looking at the euro yen to see that that it was moving higher. We've now had this volatility candle triggered on the 3. In fact, it's so extreme. It's actually produced a wick to the top of the Renko, which doesn't often happen. That's moving up with speed, with momentum. We know what happens after a volatility candle is triggered. So, you know, you can take a decision. But going up to the hourly chart, we can see here it's actually trading at the VPOC in congestion, but not quite as choppy as the pound yen has been. And what I mentioned on Friday as well, there was a time when the euro yen did correlate very strongly with the S&P 500. Doesn't happen quite so much these days, but certainly Friday it certainly did correlate very, very nicely. So if you've captured this little move, if you decided to take this little long position here, prior to that you can see very, very choppy. Very sort of lots of sideways, but we saw the buying in the euro that had come in on the CSI and the sell of the Japanese yen. That would have been a nice move higher. The decision is now, seeing this, whether you want to think, well, do you know what? Is it actually going to? Is this going to carry on higher? How do we know it's going to carry? It has to take out the height of this candle, so you know it may or may not. Looking at the CSI, this is on the 30. We do have some divergence on the 30. Let's just undock it for a second, and let's go on to the 5-minute chart and see what's happened here. Yes, and that's what we're seeing. We're seeing this is the strength of the euro, and we can see the yen falling. So it could just be a pullback in because the currencies are reaching overbought and oversold. So is it any surprise we're seeing, as I said, a correction and a pullback? But the volatility candle tells us that you know, that is what we can expect. It's knowing what to expect next, which will help you keep you calm and just take away the emotion that is inevitably part of trading. Now, I am going to pass over to David because we've focused on MT5. What have you been looking at? The Euro Aussie, haven't you?
No, I've got the Aussie Swiss.
You've got the Aussie. Oh, he wants the Aussie Swiss. Fine. I will go over to David, and then we really must wrap up because we've been going an hour. But we've kind of gone off onto lots of different other things. But they were topics that we feel that were well worth covering. Right. Can I just move over to you?
Sorry, I lost my chat box for a minute. Hopefully you can see my screen. Yeah. Can you see my screen? Yeah, fine. No? Yes? No?
Oh, there's nothing on your screen.
What? Oh.
Because you asked if anybody can see the screen. I've just got a blank screen.
Can anyone see my screen, please? It will be Ninja Trader. It should be 6 charts across the screen. Brilliant. Thanks, William. Much appreciated. Anna's screen's gone blank for some reason. Thanks, Melanie. Terrific. I'll crack on. Brilliant. Thanks, Michael. Okay, very quickly, I just wanted to show you this. This is what I was referring to earlier on, which is the Aussie Swiss. I've got the 3-minute, 5-minute, 10-minute across the top, and 30. Got the Renko in the middle, and over onto the daily down the bottom. And really, just to highlight what I was saying about this, if we just head over to the CSIs, which I've got over here. There we go. This is on 15. If I flick over onto 5, you can see here the green line rising very steeply, but the Aussie is not falling particularly strongly, but we've got sufficient strength in the green line, the Swiss franc, to give us a decent trend. You can see the strength in the yen here as well, which is falling really nicely at the moment. So lots of opportunity for trading that one. You've got the CAD, the Swiss, the Euro, spot for choice really. But just to focus on the Aussie Swiss, because it's a nice example of really why the trend is not moving that quickly. Here it is rising, and the Aussie on 15 is flatlining. So, when you go and look at the charts and wonder why something isn't moving particularly strongly, that's the reason why. Now, that's not to say that there isn't a decent trend. You may consider this enough. Let's just pop this open on 3, make it easier to see. What are we talking about in terms of range here? You're not looking at a lot of point. It looks like it, but this is only 10 pips or so. That may be enough for you. It may not be. What's interesting now is going back to what I was saying earlier on about support and resistance from a volume perspective. This is a nice little low volume node. So from a move through there, we should expect to see that bridge. But look at what we've got below. This is a very strong level of potential support with this very wide blue line, this dashed line on the accumulation distribution. Exactly the same principles as on MT4, MT5. This is based on price. So we know for a fact this is a very solid area of potential price support should we get down to it. And we're only talking a handful of pips here. So, and below that, you've got another one. And below that, you've got a really strong area of potential volume support coming into play. So there's 26 reasons why this market may not continue through here with any great momentum. Now, the other aspect I just wanted to highlight here, because again, it's a nice example. Please, 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 as Anna said at the top of the show, be aware of session crossovers. The nice thing with Ninja here, you can just pick them off easy because they're just highlighted. The Ninja Trader works in real time in your local time. So you don't have to hunt around and work backwards and take 2 hours off and all that sort of stuff that you do have to do on MT4 and MT5. This is 8 o'clock. This is London time, our time, when the London market opens. You will see this all the time in whatever pair you're trading. You will see moves like this, get us to the London session crossover, and you get the reversal coming in. If you were a market maker, you would do exactly the same. Let's be honest. It's very straightforward and very simple to do. And you'll see it in every time frame. You'll see it from London to New York. You'll see it ahead of news. Just be aware of it in terms of the crossovers at session periods, because those are the least understood and the least recognized probably. We all recognize when news is coming in. We all recognize when someone makes a statement or something's planned. This is less obvious, but you'll see it all the time. Please do not get trapped. Finally, just to show you what I meant earlier on by ripples through the market, you can see here the trend monitor has transitioned to bright red. We've gone from bright blue, darker red and into bright red. That is the traditional expected transformation from a bullish trend to a bearish trend. You can see it here transitioning on 5. It's already changed color. You can see it here starting to transition on 10. It's gone to dark blue, may go to dark red and through to bright red, or it may hop straight through to bright red. Down on 30, not a flicker. You wouldn't expect it. You've got it here on the Renko. You've got the full transition there, exactly the same color sequence. Longer term, this pair is still bearish on the daily. No change there. You wouldn't expect it. So, use the trend monitor in multiple time frames. It will help you stay in through these pullbacks that happen all the time. You've got congestion here, didn't flicker. You've got a minor pullback here, didn't flicker. Still holding you in here and starting to transition there. It just gives you the confidence to hold the trade. Going to pass back to Anna because we're way out of time.
Just someone, I can't remember who it is. Hold on, let's have a look. Ashley, yes, you said you picked up news that China would be buying more pork from the US. Would that be would that cause the yen to sell off? Well, the yen will always sell off if the market, when the market gets good news. So anything that's perceived as good news will precipitate a sell of the yen. Yes.
Also, remember, we're coming to the end of the second half accounting period at the end of this month.
Yes, as David said, we're coming to the end of Q1, and so there'll be all sorts of squaring of positions and what have you. But on a general note about the oh gosh, I've forgotten about that. Yeah, but that's buying, isn't it? They'll be buying the yen, right? Yes, I keep forgetting every year. Goodness, is it that time again? Right. Two things about the yen. You will get a sell-off of the yen if the market gets any kind of good news and it's in a risk-off mode. Basically, it's buying risk assets, and the opposite will happen. So if the market isn't in very good news, then they will buy yen. But thank you for reminding me. Twice a year, the Japanese have a very curious accounting method. David used to work for a huge Japanese corporation when he had a proper job. So he knows these things. And it causes huge repatriation flows of the yen, and it's in about this time of year. It's actually explained in the 3D book as well. Yeah. Yes, it's explained in the three-dimensional approach to forex trading, the 3D book, and it's also in the program as well. But I just want to go back to the pound yen, because I've been watching, as I said, 3-minute chart behaved in exactly the same way as we expected, with the price retreating to within the span of the candle. What's interesting on the volume underneath those down candles is it's not massive, and then we have this little candle here with a ton of volume underneath it, which is really anomalous, because if that was going to carry on lower, that candle should be much bigger than the volume would suggest. So depending on how you are, what your temperament is as a trader, as I said earlier, when you see volatility coming in like this and you're in the move, you can, there's nothing wrong with saying, right, I'm out. I don't want to sit here thinking that maybe is the original trend going to be, going to continue, or is this really the start of a reversal following the volatility? But if you can, if you think you can, if you look at it through the prism of VPA and you look at it with the how the Renko works, the VPA under those 3 candles, and what the Renko is signaling, the Renko is actually still saying, actually, yeah, it's awfully interesting. There's been a pullback. We know where there's been a pullback, but it doesn't sense that there is an imminent reversal. The trend dots are still blue. The monitor is still blue. Now, the question is, on the time-based chart, the argument now is there's got to be a ton of volume coming in. Where is this move going next? Well, it's got to take out the high of that candle if this is going to carry on higher. And going back to support and resistance, where is it heading? It is heading to this level here, 124.94, which is where the R4 is on the Camarilla. But from the perspective of understanding what happens to price action when you have an injection of volatility into that price action, and reading the time chart in conjunction with the Renko chart, it's a great way to learn these lessons and apply them in other situations. Because the one thing about this market, it is a pattern market. Things happen. They don't happen in exactly the same way every time. But once you understand what you mean by phases of price action, what do you understand by price action, and you understand the relationship between price and volume, and obviously, hopefully, you have our indicators as well, it will give you the edge, to use that expression, that you really need to make it in this market. That's all I've got to say. David, is there anything you want to add to that as well? No, I said everything. Fine. Very, very quickly, because I know there are people here who are with us for the first time. Very quickly, the indicators that we talk about our own. They're from Quantum Trading Education. This is the site where you'll find details on all of them. We can't cover every single one in these sessions because we do like to see the charts and look at VPA and and try and educate you as much as we can, but you can certainly pick up all the information on the front page of the site. There's individual the individual indicators are covered on individual pages inside the site, and you'll find all the videos. This is on the trend monitor for, as I said, MT4 and MT5. Now, the program that we talked about here is at Quantum Trading Education, and these are the modules that come with the program. The program comes, you get the full set of indicators as well. So it's the theory, the concepts, and the full package of the indicators, and the element that comprises the cost of the education bit is less than $500. We don't sell that separately. It only comes as a complete package, but we think in terms of value for money, we think that's pretty unbeatable. To go back to the currency dashboard, as I said, you can buy all indicators individually. You don't have to buy them as a bundle. You can start off with one, or you can buy the complete package. But the dashboard, if you bought them individually, they would be $770. But if you buy them as a bundle, they come to $497. As I said, but all the prices are at quantumtrading.com. You really have to come along, Hannah, to show the example of confirming entries and exits. It really, the book does cover it in a lot of details. The other thing I would suggest is there is a backup. There is a follow-up book to the complete guide to volume price, and that is all the examples book. I don't know if you've seen that, but that actually looks at all those. There's examples of charts. There are hundreds and hundreds and hundreds of chart examples in different time frames to help you with confirming entries and exits. It's not as complex as possibly you might think, but you also have to understand the phase of price action that a chart is in. So it's probably that is it $4.99 on the there's a box there. There's an examples book for stocks, commodities, and there's an example book for forex as well. But we cover it here as well, and come along to the webinars. Brilliant. Anything else, David, you want to say? We're back on Thursday. Thursdays are regular time, and where we'll be looking at forex with the Ninja Trader platform. Thank you so much for coming today. We've been way over time. Hope you enjoyed it. Have a great trading day. Lord knows what's going to happen with Brexit, whatever it is. I'm sure the world will keep turning. It always does. Take care. Bye.